Welcome to the Economy Magazine at I-24 News, where we provide a daily view on the world markets and the global economy. I'm Natalie Ehrlich. Well, coming up today, Jordan's gaming industry is taking off, but the economy is under strain with nearly 1.5 million refugees from Syria. And the pulse on the Israeli economy as the Bank of Israel pauses on rates. Inflation, labor, we discuss. Well, first, let's start now with the financial headlines. Asian stocks turned mixed Tuesday after mainland Chinese markets reversed their losses. Japan's Nikkei dropped 0.90%, China's Shanghai rose 0.14%, and the Hang Seng also moved to the upside 0.11%. European equities opened lower. By the afternoon, London's FTSE dropped 0.48%, Germany's DAX slid 0.52%, and France's CAC declined 0.70%. In the U.S., meanwhile, markets also opened in the red. Within a half hour of trading, the Dow declined 0.14%, Nasdaq dipped 0.07%, and the S&P also fell 0.23%. Staying in the U.S., the White House and congressional leaders reached a tentative pact on Monday for a two-year budget plan. If the deal is approved, it would raise the federal debt limit, resolving one of the toughest fiscal hurdles in time for House Speaker John Boehner's exit at the end of the week. But if it doesn't get signed, the U.S. government could be just 1 week from default. We'll have expert analysis on this later in the program. Back to Greece's debt story, the European Commissioner for the Euro, Valdis Dombrovskis, on Monday signaled that Athens was on the right track. Still, he urged Greece not to waste any time in adopting reforms agreed upon in its latest bailout of 86 billion euros. Well, last week, various inspectors from the European Commission, ECB, Eurozone Rescue Fund, as well as the IMF were in Greece to assess its compliance with the agreed reforms. Athens wants the review concluded as soon as possible so it can proceed with the debt relief talks and also complete the recapitalization of its four main banks by the end of the year.
The successful completion of the first program review will be a very important step in this direction. It will also help to boost confidence in the Greek economy and to restore financial stability in Greece.
In tech news, Microsoft launched its flagship store in New York City on Monday. The Fifth Avenue shop is the first of Microsoft's retail locations to be given flagship status, easily the tech giant's largest store ever. Well, the company is leasing the floors on the iconic New York location, 3 of which are open to the public. Monday also marked the debut of the company's new Surface products, including the Surface Book and Surface Pro 4.
We wanted to do a flagship right, and I think we've done that with this location here. So we were patient. We knew New York was a market where we wanted to be, but we took our time to find just that right real estate. And I think, no one can argue that Fifth Avenue is one of the premier shopping destinations in the world.
And Indonesia wants to join the TPP. During a visit to Washington, the country's president, Joko Widodo, resounded statements of intent to join the trade group, but Indonesia will still have to undertake significant reforms first, most notably in deregulation.
Indonesia is an open economy, and with the 250 million population, we are the largest economy in Southeast Asia, and Indonesia intends to join the TPP.
And the Bank of Israel, meanwhile, kept the interest rate for November 2015 unchanged. According to a statement released by the bank, inflation expectations remained stable this month and in some cases showed a slight increase. The Consumer Price Index for September declined by 0.4%, a slightly smaller decline than the average of projections, which was for a decline of 0.5%. We'll have BDO's chief Israeli economist on the show later to expand on this issue on our program. For Insight Now on the world economy and markets, we are joined by Andy Bush, a financial markets expert based in Chicago. Thank you, as ever, for being with us.
My pleasure.
Well, let's discuss Congress and the latest budget deal. How likely is it that it's going to be or not going to be passed?
Well, I think it's very likely. This is a big deal. This is outgoing Speaker of the House John Boehner's gift to incoming Speaker of the House Paul Ryan. It's not only a budget deal, which would avert a government shutdown, but it's also a debt ceiling raising deal, which would avert U.S. having to default on its debt. And it lasts for 2 years, so it gets you past the 2016 election. So this is really important. There's a lot of moving parts to this. It's not done yet, but it is a significant step forward and removes a very, very important risk that was out there for the financial markets.
All right. Well, you mentioned that Paul Ryan is set to take the helm now. What can we expect from him going forward as he comes to office and takes this position?
Yes, you know, taking away the budget deal and the debt ceiling deal, that clears the plate for him, and he can focus on what he really wants to do, and that is tax reform, and it's going to be significant. One of the things I'd point out is all of the Republican candidates have tax reform plans that are detailed. That's the first time I've seen this really since I've been going to D.C. and covering tax and fiscal policy over the last 15 years. So that's really encouraging, and this is exactly where the United States needs to go to get their economy going. So I'm very encouraged that Paul Ryan not only is going to be Speaker of the House, but he is going to focus on tax reform.
All right. Well, what about the Fed? No change just yet, right?
No, but taking away these two big risks from the U.S. government, a default and a shutdown, really clears the path for them to raise rates in December if they want to. I don't expect the Fed to raise rates this week, although they could, and they could have raised rates in September, but they chose not to. So this is a very difficult Fed to figure out because they tell you one thing and they tell you they're going to raise rates, and then at the last minute they change their mind. So they're in uncertainty for the markets right now, and I'm not quite sure how this is going to play out.
Right. As you mentioned, they're taking a pause, but they still are looking at potentially hiking rates while we're seeing much of the rest of the world here take the opposite direction, most notably the People's Bank of China and also the ECB.
Yeah, that's a great point, and really sets up the difference between the rest of the world and the United States. And of course, this has major implications for the U.S. dollar. Should the Fed move forward and raise interest rates while the rest of the world is cutting or adding to quantitative easing, it will propel the dollar higher. And that's what we saw in the euro when Mario Draghi suggested that they would increase the amount of quantitative easing at the end of the year. The euro went from 115 down to 110 really quickly. And that's exactly what you can see going forward should the Fed move to raise interest rates.
Right. Well, this could have a bad effect for exports for the U.S.
That's right. But remember, exports are only a tiny component of the U.S. economy, less than 10%. So it's not the same as Japan or China, but it certainly will hurt the profits of U.S. corporations that are doing business overseas because those earnings are in foreign currencies. And to translate them back to the U.S., you get less when the dollar's stronger. So that's where you're going to see this play out as a negative on S&P earnings.
All right. And just to recap then, keeping that in mind for our viewers, why is the Fed holding back on this move?
It's a really difficult thing to figure out. One of the two things that they mentioned last meeting was the volatility in the markets, specifically around what happened in August, and two, the strength of the U.S. dollar. So again, it's very difficult to discern the Fed and what they're doing. If you're confused, you are not alone because the Fed is giving out very mixed signals, and it's almost impossible to figure out what they're doing right now.
All right. Well, thank you very much, Andy Bush. Good to know that we are in good company on that.
Thanks.
Moving on now, amid the global economic crisis, Jordan also has been turning to the oasis in technology and innovation. Yoni Dayan has the details.
More than 500 gamers, programmers, and designers for the 5th Annual Gaming Summit, which was held recently in Amman. Reps from Google, DICE, and Sony among the attendees. Jordan, where according to the World Bank, 33% of the 7 million person population is out of work, has been looking to technology for an economic boost and as a way to support creative growth.
The slogan of the 5th Jordan Gaming Summit is how to grow in the gaming industry. This comes as part of the King Abdallah Fund's focus on development and as part of the King's commitment to supporting the youth sector in general and supporting their creativity and motivating them towards innovation and leadership. In this summit, the fund is hosting a range of speakers from around the world representing the leading companies of the gaming industry.
The summit was founded as Jordan's economy felt the pressure of the global economic crisis. More recently, the strain has been heavier, with nearly 1.5 million refugees from Syria looking for shelter from the ongoing war in their home country. Resource management and employment has been put to the test. Nearly 40% of the country is under 15 years old, and youth unemployment has doubled over the last 10 years, as nearly 50,000 people look for space in the workforce every year. At the summit, the mood was optimistic, and the word was that the gaming industry is on the rise and may reach $65 billion by next year, which is 3 times the size as revenues in 2011. Indeed, many are finding work and space to be creative in this burgeoning market in the Middle East.
I'm now working as the lead level designer in a production company called Microhouse. I'm designing a new game called The Lost Son. It's a horror survival game that is realistic, as it reflects the details of a survival journey.
The summit, participants say, is an opportunity for young up-and-comers to learn and participate in an ideas exchange.
This is an opportunity to learn from the experience of people coming from abroad. Today there is a game designer from DICE. He has extensive experience. He's been working in the field for years, and we're going to benefit a lot from him.
The Gaming Summit in Jordan holds an incredible potential for launching careers and inspiring ideas. And as the industry grows, the digital sky is the limit.
And now to discuss the Israeli economy, we have Hen Herzog of BDO with us on set. Thanks very much for being with us.
Hello.
Well, we have rumors now circulating that the economy minister is looking at potentially temporarily resigning to let this nat gas deal go through.
Yes.
How likely is that scenario?
Well, the Israeli gas market has been on hold for over a year now, ever since the resigning antitrust commissioner Gilo decided to backtrack his original decision to allow joint sale of gas between Delek and Noble. So the government proposed a framework that was supposedly going to allow us to get out of this deadlock and develop the gas industry. This framework was passed and approved by the Israeli parliament, but the government didn't have the majority to exercise its majority and take and translate this decision into action. So there is a resignation, or a temporary resignation, may prove the ability to get out of this deadlock and develop the gas industry.
Interesting. How likely do you think that is, these speculations?
Well, you have to remember that the Ministry of Economy wasn't Deri's first choice when the government was formed. So maybe he's looking to get another ticket, another office that will, in his view, be more suitable to promote his agenda of welfare economics. Although I do believe that the Ministry of Economy does have the ability to promote welfare economics, but it seems that Deri thinks otherwise.
Well, it has economics in that title there. But how important is this deal for the Israeli economy?
I think it is a tremendous deal, the gas industry. You have to remember that the Israeli public, the Israeli taxpayer, has over 65% share in the gas findings, in the gas revenues. So it is in the interest of the Israeli consumer to develop these fields. Now, there is a tension between two needs: the need to promote competition and enter new players into the market. On the one hand, that's the agenda that the antitrust commissioner was promoting, and the need to develop the industry and develop the economy. And the idea of the framework was to create such an environment that balanced between these two needs, between the need to create competition and between the need to create develop the industry. But the current situation that the market is on hold does not serve any of the parties, because we are doing nothing to promote competition, and we are doing nothing to develop our gas industry. So any solution would be better than the current situation.
Interesting. So moving on, though, with the Bank of Israel now pausing on rates, Karnit Flug, the head of the bank, choosing to pause here, very similar to the U.S. What's the cause?
Well, I think Karnit's decision not to reduce the rate is not really news. It's no news. It's no news because the market is already at 0.1% interest, very low interest rate. So another reduction doesn't really matter. You have to remember, why do we reduce interest rates? The idea, what we as economists, we call it expansionary monetary policy. But the idea is simple. You want to reduce the interest rate, you want to reduce the cost of money, the cost of capital, in order to promote investments in the markets, to promote investment and to promote growth. Now, in the last year or more, the Israeli economy has been in a paradoxical situation. Interest rate is very low, almost zero, and investment level is going down, and growth is going down, even before the current terrorist crisis. So we don't have the ability to use anymore the monetary policy to promote growth. We need to look elsewhere in terms of government policy.
What are the main reasons, though, for that softening here?
Well, if you're asking me why investments are not being made in Israel, so I think there are several reasons. One is that investments are going abroad, because investors feel that despite the low interest rate in the market, other factors like fear, regulatory environment, exchange rate promote investments abroad. Another issue is the housing bubble. The money that is already left in the Israeli economy went to investment in the housing sector. And this had two negative impacts. One, from a welfare point of view, it increases inequality because the younger generation find it's more and more difficult to purchase their own apartment. And from the growth perspective, the money that could elsewhere be divested into growth-promoting investments goes into the housing industry. So I think these two issues of regulatory, investment abroad, and the housing bubble all together cause this problem.
Well, thank you very much for bringing it to our attention. Very much appreciate it, Hen Herzog of BDO. That wraps up our show today. Stay tuned here every day for all your business coverage. I'm Natalie Ehrlich. Thanks.